The reported number clearly not good at all. Even on the top line, is it 45,820? Yes, Q3 sales 45,820, and which is way below what our estimates were. Q3 profit as well, well and truly below what our estimates were. And if you compare it to what they did in the previous quarter, which was 3,406 crores, they've come in at 1,627. So more than halved is what the Q3 PAT, consolidated PAT for Tata Motors has been. The JLR Q3 PAT coming in as well. And well, I have the 296 versus 285. So JLR performance has been great, which clearly proves that the domestic numbers haven't been that great. So Q3 sales below, Q3 PAT below, and Q3 PAT half of what they did the last quarter, which was 3,406 crores. So not good at all. Now I'll be waiting for the EBITDA number to see what they have done. The estimates were that they would probably do 6,250 crores, which would be around 8 to 10% kind of a decline on margins of close to 13%. Just based on what I've seen, the margins could be a notch below. Mind you, the revenues have gone down as well. So the profit to fall more than almost 20% versus estimates, the margins should ideally have fallen. But which is why I said, we'll just wait to see if there are any standalone, if there are any one-off surprises, all know that are coming in. Because JLR margins are in line, Tanveer. 13.9% were estimated. They've come in at 14%. So no surprises on JLR. The performance doesn't surprise. The kind of other numbers that will come out will not surprise as well. It is the domestic business which is at the play for Tata Motors, clearly, as well as some of the other auto companies. And I don't think that would have been different this time around. It's not been different. The question mark really is, what do the consolidated margins look like? Because our consol PAT has clearly well and truly below estimates.
Yeah, I think you pretty much summed it up. There's a forex loss of 174 crores, but that also doesn't explain why the profit number has been so much lower than what the street was expecting. 2,280 crores what we were expecting, and it's come in at, like Neeraj pointed out, pretty much half that mark. Now, we were expecting that the domestic business has witnessed low volumes, so that would impact the overall earnings. High discount was expected to hit domestic realizations, so some of that impact would also trickle in. Remember, the JLR sales number that came out a couple of days back boosted the sentiment on the stock as a reaction, because the numbers came in post-closing. So the next day the stock opened 2% higher. So on the JLR business, things are looking good. It's nearly $300 million, pounds of profit, which is higher than what we had pegged it at, about 285 million. Margins, we were looking at 13.9. They've come in at about 14% for the JLR business. So all is well with the overseas business. It's really the domestic business and how that's being managed that's impacting ad expense, forex movement. This was expected to hit the margins, and an adverse product portfolio was also expected to draw down on the margins. Volumes, of course, for quarter 3 were up about 10%. But really, the hit on the top line as well as on the bottom line, and it would be interesting to see what the realizations for this quarter have been.
Yatin Mota from our research team joins us right now. Yatin, really, I don't have the reason as to why the PAT is 600 crores lesser than what the estimates were. What's gone wrong in the domestic business?
Well, Neeraj, clearly there has been almost 100 crore operating profit that Tata Motors has posted on the standalone front. Clearly they have been struggling as far as the domestic business is concerned. In the morning, if you remember, I was telling about the fact that Ashok Leyland also posted losses, but the outlook has been improving as far as the commercial vehicle demand is concerned. On the standalone basis, we had Tata Motors, which posted a decline in terms of volumes for the quarter by almost 10% decline. So clearly the standalone business was not doing really very well, and that is the reason why we have seen big losses as far as the standalone business is concerned. But clearly, the earlier Religare analyst, what he was mentioning was correct. Just to bring up the point that JLR has posted numbers which are largely in line with estimates. We were estimating JLR margins to be at close to 13.9%, and they have posted a margin number of 14%. We were estimating a JLR EBITDA of close to $540 million, and they have posted a EBITDA number of $533 million. So clearly on the JLR front, the performance has been quite satisfactory. In fact, the initial feedback that we are getting from the analyst community is clearly buy on declines. Any kind of a weakness that Tata Motors shows in tomorrow's trading session would possibly be an opportunity to buy the stock rather than to sell because of the disappointing results, especially on the standalone front.